Look at this trade right here. While other indicators were still showing bullish signals, this powerful indicator had already turned gray, warning smart money was pulling out. A few candles later, price collapsed. Now look at this setup. Same market conditions, but this time, the indicator showed a clean blue baseline with strong continuation signals. If you took this trade right here, you'd have caught a massive move with almost no pullback. So what's this game-changing indicator that made the difference? It's called the SSL Hybrid Indicator, and in this video, I'm going to show you exactly how it works, the exact settings for maximum accuracy, and a complete strategy that wins in any market condition. Let's get into it. First, head over to TradingView and pull up any market you want. I'm using the 15-minute time frame on the euro-dollar, but this works on any market, any time frame. Click on Indicators and type in SSL Hybrid. Make sure you select the one by Michael00. Now this isn't your regular trend indicator that just follows price. The SSL Hybrid combines three powerful components that work together to eliminate false signals and capture the highest probability trades. First is the SSL baseline, which acts as your primary trend detection. When the baseline turns blue, it shows the trend is bullish, and when it's red, it signals the trend is bearish. But here's the genius part. When it turns gray, it means price is interacting with the baseline, giving you an early warning that the trend might be about to change. Second is the SSL2 for continuation trades. This secondary SSL catches those perfect pullback entries in case you miss the initial move. It's like having a second chance to get into winning trades. Third, and my favorite, is the SSL3 for exit signals. This tells you exactly when to get out, so you're not holding trades longer than you should. But that's not all. This indicator also includes Keltner channel integration for in-zone market conditions. It has ATR bands that automatically adjust to volatility, and diamond signals that only appear when the candle size exceeds 1 ATR, filtering out weak moves. And the best part is, it's designed with non-repaint functionality, so once a signal appears, it stays there and doesn't disappear after you enter a trade. Now let's get your settings right, because this is where most traders mess up. Double-click on the indicator to access the settings panel. You'll see several key options that control how sensitive and accurate your signals are. For the SSL1 baseline type, I recommend keeping it on whole moving average for most markets, because this gives you the perfect balance between responsiveness and noise filtration. Set your baseline length to 60, as this is the sweet spot for catching major trends while avoiding false signals. For SSL2 length, use 5. This makes your continuation signals fast enough to catch pullbacks, but not so fast that you get whipsawed. Enable Show ATR bands, and set your ATR period to 14 with a multiplier of 1. These bands automatically adjust to market volatility, giving you dynamic support and resistance levels. Then for the continuation ATR criteria, use 0.9. This filters continuation signals, so you only get them when there's real momentum behind the move. Under the Style tab, enable color bars, then click OK. Now, there are 3 ways to use this indicator, each one better than the last. First is baseline trend trading. You'll wait for the baseline to change from red to blue for long entries, or blue to red for short entries. But don't enter immediately on the color change. You want to wait for the first pullback to the baseline for your entry. This gives you better risk to reward and higher win rates. Place your stop loss below the baseline for longs, above for shorts. Target 1.5 times your risk. Second is the SSL2, continuation trading. This is where you catch those perfect pullback entries in case you miss the initial move. Wait for the main baseline trend to be established, let's say blue for bullish. Then look for those SSL2 continuation signals marked by the colored circles. Green circles in a blue trend give you high probability long entries. The beauty is that these signals only appear when ATR criteria are met, meaning there's real momentum behind the move. Then set your stop at the recent swing low and target 2 times your risk. Why? Because continuation trades often run further than initial breakouts. Third is the exit signal strategy. This is where it gets really powerful. The truth is, most traders don't know when to exit winning trades, but SSL Hybrid solves this with something called exit arrows. So when you see those red down arrows, that's your signal that the bullish momentum is exhausted. And when you see blue up arrows, that's your signal that the bearish momentum is ending. These arrows appear before the baseline changes color, giving you early exit signals to lock in your profit. But here's the thing, most traders don't realize about these settings. While the standard settings work well, each market has its own unique characteristics that require specific. Let's get into the best settings to trade Forex, crypto, and stocks. For Forex pairs, especially majors, set your baseline length to 80 and SSL2 length to 8. Forex markets are manipulated by banks, so you need these slightly higher settings to filter out institutional head fakes. Keep your Keltner multiplier at 0.2 and ATR criteria at 0.9. These settings work perfectly during London and New York sessions. For gold trading, you'll need something totally different. Drop your baseline length to 45 and SSL2 length to 3. Gold moves fast when it moves, and these settings catch those explosive breakouts early, but increase your ATR criteria to 1.2. This filters out gold's famous fakeouts while keeping you in the real moves. For crypto, set baseline length at just 30 and SSL2 length at 2. Crypto moves are violent and happen fast. You need these faster settings to catch them, but increase your Keltner multiplier to 0.3. Crypto's volatility requires wider in-zone detection to avoid false signals. Market conditions matter too. During high volatility, news events, market opens, increase all your length settings by 20% to avoid getting chopped up. During quiet consolidation periods, drop them by 20% to catch smaller moves early. For futures, set your baseline length to 45 and SSL2 length to 7. Futures markets move with institutional flow, so increase your ATR criteria to 1.1 to filter out the noise from algorithmic trading during RTH sessions. Pay special attention to the gray candle warnings during key levels. Futures often respect previous day's highs and lows, and SSL Hybrid's Keltner integration helps identify these critical zones. For overnight futures sessions, increase all length settings by 20% as the lower volume can create more false signals. Thanks for watching, and I'll see you in the next one.